This is Curated Currency, a NASDAQ market observation. This is not a signal. This is NASDAQ chart on the 5-minute time frame. And what makes this session interesting is that the market actually showed us its rhythm pretty clearly today, but only if you slow down and watch how price behave during compression and liquidity. Because if you just glanced at this chart, it looks like a simple trend higher. But when you start breaking down the phases, compression, liquidity, expansion, and reaction, the structure of the day becomes a lot more clearer. So let's walk through it. Start by looking at the left side of the chart. Early in the session, the market is gradually climbing. But notice the way it's climbing. It's not exploding straight up, it's more so of a stair-step movement, pushing higher, pause, pushing higher, pause. And that kind of structure is important because it builds confidence in one direction. When traders see, the stair-stepping market like this, they begin to assume that the path of least resistance is simply up. But markets don't usually reward comfort for very long. And that's where the chart starts to get interesting. Now, if we look at this first highlighted area, after the climb, the market stops moving with that same freedom and begins compressing, quote unquote consolidating. You see the candles overlapping more, momentum slows down, price begins rotating in a tighter range. This is a classic compression phase. And compression/consolidation is where traders lose patience, because when the market slows down like this, people start feeling like something should happen immediately. But compression is not the move. Compression is just the market building pressure. It's the market pausing before that next phase reveals itself. Now let's watch what happens right after this area. The market dips lower, it takes liquidity under previous structure. But here's the key point. The important thing isn't just the liquidity sweep. The important thing is the reaction that comes after. Because once that liquidity gets taken, the market has a choice. It could continue lower, or it could stabilize and remain or reclaim structure. And here you see that the market doesn't stay weak for very long. Price responds, it stabilizes, and begins to push back higher, which tells us that the move lower was more so about clearing positioning than beginning that new downside move. Then we look into another range here. Price is active, but it's still contained. You see that movement on both sides, but nothing is fully resolved yet. This is just another example of the market creating emotional noise. There's enough movement to make both buyers and sellers feel justified, but structurally the market is still holding inside a range. And once that range finally resolves, then we get that cleanest expansion. Then we get that cleanest expansion of the session. Price is now traveling, candles start stretching, momentum becomes clearer, and the market stops negotiating and starts moving with intention. Later in the session, we reach these highs, and this is where the market begins to show signs of maturity. Price pushes up into this area, taps into liquidity above the highs, but continuation doesn't look as clean as it did earlier. And that's important, because sometimes the signal isn't a dramatic reversal. Sometimes the signal is simply failed continuation. The market reaches higher, but it cannot maintain that same urgency, and that's often the first clue that the move is beginning to mature. If there's one thing to take from this session, is this: do not focus on where price went. Focus on how price behaved during each phase. Today we saw the full sequence: an early climb, compression, liquidity being taken, expansion, then maturity near the highs. And when you start recognizing those phases, the market becomes a lot easier to read, because you're no longer reacting to every candle. You are observing the condition of the market. Same system, different day. This is Curated Currency.